Welcome back. In this video, I'm going over your ultimate guide to quarterly estimated tax payments. I'll be answering all of the common questions. Do I need to make a quarterly estimated tax payment? If so, how much do I pay and by when? What happens if I don't make a quarterly estimated tax payment? And most specifically, I'll be going over my quarterly tax payment calculator so that you understand everything you need to consider when figuring out your quarterly estimated taxes for you and your business. But first, my name's Amanda, and you're watching The Business Finance Coach, where I simplify all of these technicalities of business to help you succeed so that you can focus on what you do best with the confidence and clarity of knowing that you're following all of the rules. Every additional video that I refer to, and I have some free trainings, everything is linked in the description down below. Now let's jump into quarterly estimated tax payments. And the first question we'll be answering is, how do I know if I need to make quarterly estimated tax payments? Do I need to pay quarterly estimated taxes? Often people will ask if they've just set up an LLC or started a new business. I've never made quarterly estimated tax payments before. Do I need to make them? So the answer is yes. Everyone is required to pay quarterly estimated tax payments if at the end of the year, when you file your personal Form 1040 or other business tax return, if when you file that for the last year, you owe taxes, guess what? You were required to have made quarterly estimated tax payments throughout the prior year quarterly. Now, this is because we have what's called a pay-as-you-go tax system, which means we must pay tax on our income as we earn it. And this makes sense, right? Most of us want to do this. We want to pay taxes when we have the money because it's easier to do it that way. And this applies to individuals as well as businesses. We'll talk more about that next. Now, some companies that pay people actually are required to or can withhold taxes. And these are like quarterly estimated tax payments, right? Because they're withholding them on that person's behalf. So for example, if you think about when you work as an employee, the business is required to withhold estimated taxes from your paychecks, which is why most employee workers don't worry about things like quarterly estimated taxes. Now for contractors, or self-employed businesses, as well as any business, no one paying us is required to do that for us. So we have to do it ourselves through these quarterly payments. Next question, do I or my business make the quarterly payment? This is actually a really tricky point that people often have trouble understanding, so listen up. For most business owners, it's you as an individual that makes the quarterly tax payments. And that's because most businesses are what we call flow-through entities. All of these businesses right here. And that means that the business activity, income, expenses, ends up on your personal tax return. And the business doesn't pay its taxes in a flow-through entity. Instead, that flows through to each owner's tax return or one owner. Now, the only business that actually makes its own quarterly tax payments is the corporation. And note, that's not the S corporation, only the corporation. So for most of you watching this, it's you personally that are going to look at your situation with your business activity, right? With any investments, with any spouse's income and activity, all together to determine if you have a quarterly tax payment to make or not. We aren't going to cover how this actually happens on the tax return as far as the business activity getting to your personal return, but we'll include a link to another video that details that for you. So on to the next question. What are the quarterly tax dates and what months are the tax payments due? So technically you're going to notice these aren't quarters, They're what the IRS calls periods. Quarter one is January, February, March. Quarter two is only April and May. Quarter three is June, July, August. And quarter four is 4 months, September, October, November, December. Now, the quarterly payment is due by the 15th day of the following month. So for quarter one, that means that it's due April 15th. For quarter two payment, it's due June 15th, and so on. Now, if the 15th falls on a weekend or a federal holiday, then the date is moved to the next business day. Now, what happens if you don't pay your estimated quarterly taxes? Well, at the end of the year, if you actually owe tax, then you might be charged a penalty for not making quarterly payments. I say you might be charged a penalty for not making quarterly payments because there are two exceptions to the penalty. So the IRS gives you some leeway to figure out what's going on with these requirements and a bit of wiggle room before they're going to go charging you penalties. So next, I know you're dying to know, what is the penalty amount for not paying quarterly taxes? The penalty is 0.5% of the amount that you owed by the date, and it's 0.5% per month until you've paid that balance. Now, this is capped, which means it can't exceed more than 25% of the amount that you owe. So this calculation can get quite complicated because we have 4 due dates. Basically, the default IRS method is to assume that you earned the income and therefore owe the tax evenly throughout these periods of time. If your income isn't earned evenly throughout the year, which a lot of people hear, that's probably the case for you, and you get a penalty because of that, there's another method that you can elect to use so that you can tell the IRS exactly how much you earned each quarter and avoid any penalty that might come from making a lot of money at the end of the year and not making money throughout the year. Now, you can see how any penalty is calculated when you update your personal tax return with a tax preparer or using DIY software like I recommend on Form 2210, Underpayment of Estimated Taxes for Individuals, Estates, and Trusts. And that form is attached to your personal Form 1040. So you can check that out before you even file your taxes. But what are these exceptions? I know you're saying, right? We have a few exceptions to the tax penalty. The first is if you owe less than $1,000. The second is as long as you paid in 90% of your current year taxes, there's no penalty. And the third, this one is a really important one, so long as you paid in 100% of your prior year taxes, or if your income this year is $150,000 or more, then it's 110% of your prior year taxes. So to show you what this last one means, because this is one of the most important ones, because this is about something we know, prior year taxes, versus 1 and 2 are about current year taxes, and we're trying to estimate those. So this one means if I owed $4,000 in taxes last year, and this year my business explodes, right? I make $5 million, which means I owe more than $1 million in taxes, right? I won't be charged a penalty for not making quarterly payments so long as I pay in $4,000 times 110%, last year's tax times 110% is $4,400. So all I have to pay in is $4,400 and I won't be charged a late penalty for this massive amount of income. Now, in the following year, I would have paid $1 million in taxes and therefore have to pay that. So these exceptions to the tax penalty mean that the IRS give you a year of earning more to figure out what's going on with these requirements. And of course, you can estimate off a little bit as long as It's not more than $1,000 or at least 90% of your current year taxes, and you'll also not owe a penalty. So now let's get to the good part, the part I know you've been waiting for. How do I calculate quarterly tax payments so that I can also know if I even need to make a payment this year? Remember, the only way to know what your tax return will be at the end of the year is to actually update a tax return now, right? But this isn't feasible because of all the complicated aspects of filing our taxes, right? So we're going to use an estimate, and there are a few ways to do this. Number one, the easy thing to do that most tax pros do is they follow that penalty exception we just went over, right? So they'll take your total taxes when they file your tax return by April 15th and divide that amount by 4, and there are your 4 payments, or 110% of that if you have higher income. But as business owners, we don't like this idea as much, right? Because like we said at the beginning, we want to pay as we're actually earning the money. We don't want to have a huge bill at the end of the year. We don't want to pay in extra taxes if we're earning less. So the second option is to use an online DIY tax prep software, and they have a feature in these softwares to answer some questions, and it will come up with an estimated amount. And so all of this is covered in the third option, and best option, of course, is my quarterly estimated tax calculator. And this is a spreadsheet template that follows your personal tax return form 1040. Now, if you're a corporation, you don't need a calculator. Remember, that's the only business that makes quarterly estimated tax payments from the business. And that's because the corporate tax rate is a flat 21% of the net business income. And we'll talk more about that business report in a moment. So next, I'm going to give you an overview of my quarterly estimated tax calculator spreadsheet template so that hopefully this calculation makes more sense and what you need for it, whatever method you end up using. Even if you just end up, estimating your taxes yourself, you might be able to do that if your situation is simple and you get your head wrapped around it from this calculator. So quarterly tax payments 2022 calculator. I'm gonna run through an overview of my quarterly tax payments calculator. You can see it here. Now, the first thing to do is get your prior year tax return or the last return you filed, because there are some aspects of doing a detailed calculation that you're gonna need this for, including that first exception we talked about of using your prior year taxes to estimate your payment. So our basic calculation starts with, number one, your income, right? This is the main piece of doing a quarterly estimated tax calc. This includes any W-2 job income you have, any investment income, unemployment income, retirement withdrawal, early retirement withdrawal, and of course, your business income. Now, for your business income, we are talking about your business profit, net income. So if you're using accounting software, you're going to look for the income report, or it can also be called profit and loss statement or P&L. Now, this is an example from my auto accounting spreadsheet template from my Master Your Accounting and Taxes course. This report summarizes your accounting records, which record every transaction that affects your business or that's in your business accounts. So this report shows the total income minus all of your business expenses, and it's the net amount that you need to take over to your quarterly estimated tax calculation. If you own a business with multiple people, you're going to go ahead and share this amount, the net income, with the owners of the business, normally based on your ownership percentage. So if you and one other person own the business 50-50, you would split the net income 50-50. The second important thing to know here is that it does not matter how much of this money you personally paid yourself or took out of the bank or spent, okay? It doesn't matter. You pay taxes on this no matter what. If you have a separate business, you get credit for this through something called basis. And you got to check out other videos on that topic, but I promise you're not getting double taxed. You pay taxes on this now and consider basis for later when you're paying yourself back or paying yourself, which is generally not taxed, meaning your withdrawals of these earnings of money you put into the business, none of that is taxed. Our next section is a few very specific deductions from our tax form you can see here. The first is business health insurance. And the second is half of your self-employment taxes. And you can see this on the tax form and then on our calculator. And the self-employment taxes are updating automatically. There are some other deductions for AGI, but they're very specific and very limited. This is where looking at your prior year tax return can come in handy to see if you usually get some other ones. Now, lastly, we have the tax calculation on my quarterly tax workbook, similarly to the tax return. And so there are two other deductions that we have two more worksheets for in the calculator. The first is itemized deductions. Many people don't itemize anymore for reasons I won't go into in this video, but I have another video that you can check out that covers that in more detail. If you're looking at your prior year tax return, you could use your itemized deduction amount as an estimate or update this worksheet and go through each individual deduction. The second deduction that's part of our tax calculation is called the cubic deduction. And that's 20% of that business net income we talked about. But of course, there are some caveats and limitations because this is taxes and that's how taxes work. And we have another worksheet as well in the calculator for updating this amount. And of course, there's another video that goes into that too. So lastly, our calculator is doing the calculations just like done on the tax return for your total tax amount. This is the total amount of tax that's calculated on the return based on how our taxes work, which aren't flat taxes, which is why it's hard to estimate because we got to know the total income to know the different percentages of tax that you're going to be charged. You can see we have total tax and self-employment taxes. Then we can subtract out, right, any tax payments that you've made, even if they were through a spouse's W-2 or you have a W-2 job as well. The federal income tax withheld will offset our total taxes here. This is where we'd also enter any payments we've made as we're going along and updating this calculation each quarter. And so lastly, we'll get a total amount per quarter that you want to pay. If you don't have an amount due, if it's negative, then you don't need to make a payment. If you have an amount due and it's less than $1,000, then maybe you could skip a payment, but you might be risking it. But updating a calculation like this is helpful because you're going to get this type of detailed information and you know if you're being generous with your income estimates or if you're being, more on the low end of your income estimates. And that's all for our quarterly estimated tax payments calculator. We have other videos that go into more detail just on this calculator, but this video was more of an overview so that you get the basics, so that you get the big picture. And just to recap, do I need to make a quarterly tax payment? Yes, if you owe taxes. And how do you know? You got to run a quarterly tax estimate, which you can have a tax pro do, you can use a DIY tax software or the IRS website, or probably the best way to do it is using some sort of spreadsheet calculator like the one I showed you in this video. Check out all the other videos I've referenced for more information. Let me know any questions you have down in the comments below. I'd love to hear from you. And if you're new here, consider subscribing to my channel for more information. And it was so delightful chatting with you today about quarterly estimated taxes. I certainly hope you had as much fun as I did. And I hope to see you in the description box below where you can find the next videos and resources to check out. Or right around my face, there might be a bunch of options too. That's all for now. See you next time. Bye.